are you today? Hope everybody's doing well. Really enjoying these clear, crisp, cold mornings. It makes the fall weather a lot better in this October month for sure. My name is Robert Ross. Been in the reverse mortgage industry for going on 17 years now, or 16 years, something along those lines. So been working with older homeowners and realtors client database for a long time now. Really over the last, I would say probably 11 years or so, I've been working exclusively with realtors and their clients and helping them utilize the reverse mortgage for purchase product. And this is obviously where they're taking a reverse mortgage and using it to buy the next property. In other words, they're not putting on the house they currently own, they're actually using the loan as purchase money and putting a down payment, of course. But we're going to talk about both refinance reverse mortgages and purchase mortgages today for reverse, as they play a direct role in helping realtors earn more clients and earn more listings ultimately. So class is going to run 1 hour today. We're going to cover some basics, some demographic conditions. We're going to cover some marketing things. So be sure to stay till the end. That's where we get into how to incorporate some very simple ideas in marketing to older homeowners to motivate them to list and repurchase. Whether they use a reverse purchase or not is irrelevant. It's about motivating those older homeowners to get to a better property for their retirement needs. But let's go ahead and dive into a few things here. So right off the bat here, over the last probably 10 or 11 years, I've really identified, or at least our company and myself included, have identified 3 ways how a reverse mortgage could directly affect or help out in increasing a realtor's activity or listings rather. So the 3 ways that I've learned, and these are all coming straight from realtors that I've talked to over the last 11 years, I've had the same questions over and over again. So having you guys understand these questions and have the answers ready to go is going to help you with those older homeowners. Well, number 1, if you haven't noticed, there's a lot of advertisements going on for reverse mortgages. They're happening on TV, through newspapers, mailers, you name it. A lot of those older homeowners that have been in their houses for a long time are getting advertisements about reverse mortgages. Now, what typically happens is they're either going to ask a reverse mortgage company, their financial planner, or a realtor, how a reverse mortgage work, or what is it? So having just a good general knowledge of the product as a realtor is going to help you put you above your competition in answering those questions. So that's number 1. But here's something that is definitely a fact in our industry. For those folks who inquiry about a reverse mortgage or look into getting one, only about 50% of them actually end up getting a reverse mortgage on their current property. And that could be because of a lot of reasons. Maybe 1, the house that they're doing the reverse on isn't necessarily the correct property or proper property for them to live in for the rest of their lives. In other words, maybe it's a 2-story house, maybe it's a pool home, maybe the lot's too big, maybe the house is dilapidated and just in poor shape, and they need to get something better. So there's a lot of reasons why they don't get reverse mortgages. One of the ones that we see a lot is that they owe too much on their mortgage, and the reverse mortgage either A, can't pay off their current loan entirely, or B, after they pay off the reverse mortgage, it doesn't provide them enough cash benefit to stay in that property. So looking at a different home for the retirement needs may be the route to go. But one thing I want you to understand is this. When a older homeowner asks you the question, what is a reverse mortgage? What I really want you to key into is this. What they're telling you is that they have a home, they have equity, they're older, and they're having financial difficulties. In other words, their Social Security or even their pension or a combination of those 2 items, or those income streams, aren't providing enough income to cover what's going on in their life, whether they have a mortgage payment on that property, whether they have medical expenses or just general expenses in essence. So these people are really telling you this, that they're having a hard time making ends meet in their house they're living in, but they have a lot of equity. So know that more times than not, when they don't get a reverse mortgage, what they end up doing is selling that property. They list with a realtor, sell it. So that's where what I'm saying is that possibly could be a listing for you when they ask about a reverse mortgage. So when you hear that question, what is a reverse mortgage? Perk those ears up and listen, dive in a little deeper to that conversation. You might reveal that they're having some cash flow issues and selling that piece of real estate and getting to something better for retirement may be a solution for them. Number two, for those folks who have identified already, hey, I'm living in a house that's too big. I'm living in a house that has a large mortgage payment. I'm living in a house that is just not right for me in my retirement years. For those folks that have already identified that, a lot of times what they're trying to accomplish when they sell their real estate is they're trying to sell that piece of real estate to get rid of their mortgage that they owe and get rid of that monthly mortgage payment. They're trying to get to a better property for their retirement needs. And all the while, they're trying to also retain some of the appreciation or net proceeds from that house after they sell it. So you have three things. They're trying to get rid of a mortgage payment, trying to retain some equity from the house after they sell it, and they're trying to get to a better property that suits their retirement needs. So that's where the reverse mortgage for purchase product can really help out. As you see, a reverse mortgage for purchase or even a regular reverse mortgage don't have mortgage payments. They're actually optional, which we'll talk about in a few. But the fact that they don't have a payment and they can use that money to buy that next property and use some of their net proceeds from the house they sold recently as a down payment and retain the other portion of it in their retirement portfolio puts them into a better situation for their retirement for the foreseeable future. So that's where that reverse purchase really, really does a great job in helping out in those three aspects. And last but not least here, number three, for those folks that already have a reverse mortgage, whether they bought a house or they got a regular reverse mortgage on the house they've been living in forever, at the end of the day, we all pass away, right? So the challenge is this: a lot of times the homeowners that have a reverse mortgage currently, or even their family members, don't really understand how to navigate when the loved ones pass away that have a reverse mortgage. So there's obviously options that they have. You know, the house doesn't just go back to the bank or anything like that. It's a loan on title like any loan. It does have to be paid off, but understanding those options is very important. So we have a whole section of our class today that's going to cover that as well. But let's dive into what is a reverse mortgage. So let's really dissect that bullet number one there. So what you really have at the end of the day here is a reverse mortgage is simply like any other loan out there. It's a loan that's recorded against the property. The owners of the property are still the owners. They're still on title, either in their own personal names or they have a trust set up. Either way, it doesn't matter. So a reverse mortgage is simply a loan that allows them to tap into the equity of their property without having a mandatory monthly mortgage payment. So here's how we typically explain it to older homeowners. When you get your first monthly mortgage statement on your reverse mortgage, it's going to show your balance for that given month, just like a regular mortgage would. It's going to show you the interest costs for that month, just like a regular mortgage would. If you take your reverse mortgage statement and simply file it away and do nothing with it, what's going to happen is the interest that's owed for that month will simply be added to the balance, and the next month's statement will have a higher balance based on that deferred interest. So that's how you can really compare it to a regular mortgage. Now, with reverse mortgages, you don't have to let the monthly mortgage payment defer. You can actually elect to write a check for that amount, for the interest that's due for that month, and send it in. And now what happens is the next month when you get your statement, your balance is exactly the same as it was from the month before. So ultimately what you have here is you have a reverse mortgage or a mortgage that has optional monthly mortgage payments. Now, you can actually pay more than what's due for the month, and you'll start to pay down balance. You can actually pay maybe a portion of the interest for that month and only defer the other portion to the balance, therefore slowing down the deferred interest. The idea is this: we want to make sure that our older homeowners understand with the reverse mortgage that you control the equity in the home, not the bank, not FHA. This is an FHA loan, by the way. So you control how the loan defers or if it defers at all. So at the end of the day, what you have here is a mortgage with optional monthly mortgage payments. Now, if a client never makes a payment on a reverse mortgage, that's okay. They don't have to. That's one of the main reasons why folks take out a reverse mortgage, is to not have a monthly mortgage payment. But a lot of times that comes with some concern. Are you giving up something? Is something going to happen to me at the end? Well, at the end of the day, whatever your balance is irrelevant. You get to live in that house for the rest of your life. Even if the house is upside down, even if you owe more than the property, it doesn't matter. As long as you're abiding by the rules of the reverse mortgage, which we'll dive into in some later slides. But what you're going to realize is those rules are very basic. So at the end of the day, you get to live in that house for the rest of your life, despite if it has equity or not. So if you compare two customers or two reverse mortgage borrowers against each other, a borrower who has contributed, maybe made monthly payments on and off throughout their life, to another consumer who has a reverse mortgage that never made a payment, they're going to have two different outcomes when they finally pass away. Obviously, one balance is going to be higher than the other. So really what you have here is a loan that has control and that you're able to live in for the rest of your life. So it's a very comforting thing to know when you're in retirement. Now, the reverse mortgage product has only been available in a refinance product for most of its life in the lending arena. So all the way from the late 80s till 2009, this product was only available in a refinance. So a customer that is having maybe some financial difficulties in their home, they're trying to figure out how to make those ends meet and try to figure out how to stay in that property, would simply call up a reverse mortgage company and say, hey, I'm short on income. I have a lot of equity. I would like to take out a reverse mortgage to tap into that equity, eliminate my monthly mortgage payment, and live in my house for the rest of my life. Well, maybe that house that they did the reverse mortgage on may not be the correct property for their retirement future, right? So maybe selling the property at that moment in time might have been a better option, but it wasn't available in a purchase product, only in a refinance. So in 2009, Congress, FHA, I think AARP had a role in it in some degree or another. They came out and rolled out the reverse mortgage for purchase product, allowing older homeowners now to take a reverse mortgage out on the house they're buying as purchase money, and they're simply putting down the difference as a down payment. And that opened up a lot of activity for older homeowners. It certainly opened up a market for realtors as well to work with older homeowners and transitioning them to a better property. So we're seeing a lot more reverse purchases being done today. One, because it's becoming more popular, and two, because our older homeowners are starting to see that, hey, I do need some of that equity in my overall retirement portfolio to sustain retirement needs. So peeling off or holding back some of that net proceeds after they sell their property is very important. It's becoming more upon the realtor than the financial planner now to help out those older homeowners shore up their shortfall in retirement. So that reverse purchase product is starting to get some popularity for sure. Now, clients can qualify for a reverse mortgage despite having other financial difficulties or not qualifying for any other type of financing out there. You all know, obviously, when it comes time to qualify for a regular 30-year fixed mortgage, it's difficult. You got to have perfect credit, you got to have good income, great loan to values, the whole 9 yards, right? Well, a lot of our older homeowners don't have that luxury. They don't have the luxury of their income they once had. They usually are living on the Social Security income or maybe a small pension or a combination of that. And qualifying for traditional financing is very difficult in your retirement years. So the reverse mortgage, you can qualify despite not qualifying for a traditional loan. Social Security is usually enough to cover the job with a reverse mortgage to qualify. We just have to demonstrate that you can afford the housing expenses, whatever's on your credit report as a trade line, and have a little bit of money left over to keep some groceries in the refrigerator, and that'll do the job. And it doesn't have to be a certain percentage of your income. It can literally use up all of your income for those items, and you qualify. So although it can be easier to qualify on an income standpoint, doesn't mean our loan's not tedious. We do have some other things that we look at, such as, for instance, we pull the property tax payment history for all real estate owned, insurance payment history, homeowners association payment history for the last 24 months up to that point. So that way we can demonstrate that they pay those items on time. So we do have some nuances that we got to deal with, but for the most part, qualifying for a reverse mortgage is much easier on income than a traditional loan, and credit for that matter. Now, one thing that I've learned over the last probably 9 or 10 years working with realtors and their clients is a lot of times the conversation of selling that piece of real estate they've lived in for a long time and buying something that's better for their retirement can be a difficult conversation. Look, I've been in my house for 17 years now, and I've accumulated a lot of things. I have roots here, and now selling my property and doing something different is not an easy decision. And I'm 47. I couldn't imagine making that decision at the age of 70. It could be very difficult. So a lot of clients that I've met with and their realtors don't have the strongest intentions of selling and repurchasing. But there's a problem going on typically that causes those conversations to come up. And what I've done over the past years to help those customers identify where the problems are in their overall portfolio is this. You sit down, you simply run a budget, and you simply start off with their income, Social Security, pension, and work the numbers down. And what you identify most of the time is that they're short in income. In other words, the house is the problem. They have a mortgage payment that's too high. Their property taxes and all their expenses on that bigger property aren't what they're looking for, and it's causing them to be short in retirement. So selling that property becomes the solution more times than not. So really diving in and getting into those conversations with those older homeowners and doing the discovery work of running a budget and other things that they have will reveal the fact that, hey, selling that property, extracting some of that equity and moving to a better home for your retirement needs is what's going to shore up your finances and put you in a stronger position to live a better retirement. So having those conversations can be difficult, but just approach them from a number standpoint, and that'll certainly expose the issues that they have. Now, let's briefly talk about a refinance, as you will get questions about this product. And you've probably heard when you do a reverse mortgage refinance, you can receive the money in many different types of fashions. So let's cover how that would look. My typical customer is this. They're calling in, they're saying, hey, I have a mortgage payment. My Social Security is, between my wife and I, is $2,000 a month. And my mortgage payment is $1,800 a month. Well, as you can see, they only have $200 left over. And more times than not, they're spending down an IRA or a stock portfolio or some sort of investment account to offset the shortfall in their income. Well, they're saying, look, I want to get a reverse mortgage. I want you to pay off my mortgage, eliminate my monthly mortgage payment, making it optional if they wanted to make payments or not, but most time they don't. And that by getting rid of that monthly mortgage payment, that frees up more of their income to handle their necessities in life. So that's bonus number one. Number two, more times than not, they qualify for additional proceeds after we pay off their mortgage. Those proceeds, they can receive in different formats. One option is they can say, hey, look, out of that extra proceeds that I have, can you send me a monthly check? And that'll help offset some of my income. That's great. Or my expenses, rather. That's one way to do it. The other way is they can take lump sum distribution at closing, and they can do that for anything they wish. They can use it to remodel a kitchen, a bathroom, pay off credit card debt, buy an RV, whatever they need to do. They can certainly pull that equity out to do whatever they want. It's their choice. It's their equity. Number three, they can use the money and hold it in a form of a line of credit. Now, the line of credit feature is a great option. Here's why. Number one, when you leave it in the form of a line of credit, you haven't borrowed the money yet. So you're not being charged any interest on what you pulled out of the reverse mortgage. That's a good thing. You're saving on interest. Number two, the money's available to you anytime you need to pull it out. And then finally, number three, the money that's sitting in the line of credit gets a growth rate. In other words, they're unlocking more equity for you systematically throughout your life in case you need more money down the road. And one of the things that's great about the reverse mortgage line of credit, unlike a traditional home equity line of credit that you would get from like a Wells Fargo or a B of A or something like that, is that the reverse mortgage FHA line of credit can never be frozen given the economic environment around it. So even if home values are plummeting and interest rates are high and everything's going on, the sky is falling, as you would say, that reverse mortgage line of credit cannot be frozen. It's available for you for the rest of your life. So that's a very comforting thing to have in retirement as a as a backup plan for later on. So that's your typical reverse mortgage refinance. Now, all the loan amounts are determined on the youngest borrower's age, which we'll talk about. And for an FHA reverse mortgage, the entry level age is 62. And by the way, an FHA reverse mortgage is called a HECM, HECM. It's an acronym which stands for Home Equity Conversion Mortgage. That is the FHA reverse mortgage. There are other products that are non-FHA, which we'll talk briefly about in later slides. And those usually bode well or provide a better solution for houses over $1 million and higher. But let's keep moving on here. Now, of course, a reverse mortgage can be used on a single family residence. It could be used on a condo. If we're dealing with the FHA product, then the condominium complex, or community rather, should be FHA approved. Now, a lot of them are not approved, so it doesn't mean we can't do the loan there. We can try to do what's called a single unit approval and achieve that approval. That could add some time to the file, though. I will fair warn you now that it could take another 2 to 3 months to get an FHA spot approval or single unit approval. But ideally, we want to target those communities that are already FHA approved. And if for some reason we can't get it done on an FHA level, we might look towards the private sector, as their guidelines for getting condos approved are a little easier. Now, 1 to 4 unit, you can certainly do a reverse mortgage on a 1 to 4 unit. You can live in one of the units as your primary residence and rent out the other units and collect rental income, all the while not making a monthly mortgage payment. And I'm starting to see trends of that as well, where older homeowners are now creating cash flow by doing just that. Now, one thing I wanted to illustrate in this last bullet here, this is an owner-occupied loan. So whatever house has the reverse mortgage on it has to be your primary residence, where you live the majority of your time. You're probably wondering how they know that. Well, they send out an annual occupancy cert every single year to the property. You have to attest to the fact that you live there as your primary residence and send that thing back in. Now, there's other ways they do it as well. They don't obviously illustrate those to the general public. Otherwise, people would be trying to fudge the system and rent out their properties that have reverse mortgages on them. You can rent out a room or two, that's fine, but you got to live in the house as your primary residence. Now, let's dive into our first reverse mortgage for purchase example. So this is your typical downsizing reverse mortgage scenario where someone's selling that house that's larger, maybe not suitable for the retirement needs. Maybe they got a mortgage payment. They're trying to tap into more of the equity. They're selling it with a realtor, of course, and they have net proceeds. Now that's what they have to work with to buy the next property. So let's dive into this example. This example is based on a 73-year-old borrower. We just picked that age out of the sky. So, obviously we can do it down to 62 years of age, but let's use this example at 73. So you list and sell their current home. Their current home has a mortgage payment on it, and they're trying to figure out how to get rid of that monthly mortgage payment. So you sell the property, the reverse mortgage gets paid off. Their mortgage gets paid off. All the costs with selling that piece of real estate get handled through the transaction. And now after all that, they net $400,000 in available proceeds to go put a roof over their head for the rest of their life. And now they got their $400,000. They're telling you, the real estate agent, they're saying, look, you sold my house, you paid off my mortgage, I don't have a monthly mortgage payment anymore. I have $400,000 to work with. And here's what I need this $400,000 to do. I need the $400,000 to put a roof over my head for the rest of my life. I need to not have a monthly mortgage payment. I'm tired of making payments. I'm on Social Security. Number 3, I also need some of that $400,000 retained for my retirement needs. And you're thinking, gosh, how am I going to pull that off? With $400,000, you want to hold some of that back for your retirement needs. You don't want a monthly mortgage payment, and you want a roof over your head the rest of your life. I don't think you're going to be able to buy in California, at least something solid. So I don't know how you're going to pull this off, but you've taken the class. You understand that a reverse mortgage for purchase could make this happen. So let's dive into how that plays out. Let's say you locate them a downsized property that's sold for $600,000. And based on the age of 73, we say, look, take $259 of that $400 you netted from the previous home, put it down on that $600,000 property. The reverse mortgage will get funded into escrow as purchase money for $341. and now you've paid for the full price for the property. Now, if you're obviously drawing to conclusions here, you can see what's going on, right? Number one, the client did not use all their proceeds from the house they sold. They actually retained $141,000 of the previous property. So now they can stick that in the bank for their retirement needs. That's great for retirement. Number two, they don't have a monthly mortgage payment anymore. So they went from paying out $1,500 to $1,800 a month living on Social Security to a mortgage payment on their previous home to having no monthly mortgage payment. And best of all, they put a roof over their head for the rest of their life. So now you can see how this customer went from a shortfall in income, paying a mortgage with no cash in the bank, to now having a roof over their head, cash in the bank, and no monthly mortgage payments. That will certainly shore up one's retirement. No doubt about it. We do these transactions and they turn out very nice at the end of the day. And of course, a realtor such as yourself would have gotten the listing and the buying opportunity with that same client. So that's a bonus for you guys as well. Now, maybe this customer had bad FICO scores, right? Maybe they had a 580 FICO or a 600 FICO score. We don't really care about your FICO scores on reverse purchases. Although a bad FICO score does mean that you have some bad credit, right? Or less than perfect credit. What we're really focused on is the last 24 months. What's gone on in your credit history in the last 24 months? Did you have any mortgage payment lates? Did you have any credit card payment lates? Did you have any tax payment lates? Those aren't on your credit report. We pull those from the county. If there's lates that we're seeing, typically what we need at that point is a letter of explanation outlining a hardship. And believe me, more times than not, an older homeowner on a fixed income can identify a hardship. It could be anything. And then sometimes we need a letter of explanation, but sometimes we may need supporting documentation. Like for instance, I had a medical issue. I had to put a new transmission in my car. The water heater broke at my house. Those things will put somebody behind the 8 ball when you're living on a fixed income, right? You have to have a water heater, right? So water heater could cost $1,000 to install. And if you spend $1,000 on doing that, you may not be able to make your mortgage payment or make a credit card payment that month, or at least on time, right? So that would be a hardship in our world. Very, very makes sense type of underwriting when it comes to that. The fact that we can get the loan approved with a small amount of income is truly amazing. So that you'll see in some future slides that a lot of our older homeowners don't have the cash flow they once had when they were working. All right, let's talk about what you need to know before you write an offer using a reverse mortgage for purchase, okay? All right, so pre-underwriting, I can't stress this enough. This is something that at least Ryan and I in our firm focus on a lot. It's very important because, well, the first thing is we're dealing with older homeowners, right? And I'm very passionate about my older homeowners, and I want to make sure that we're doing the best service we can and that what we're saying we can do, we can deliver. I want to make sure they can get into that next property without any hiccups. It's a very emotional sell for them, and you know, it's a delicate transaction. So pre-underwriting, very important. I want to spend some time with that customer. I want to get their credit pulled, go through all their income, get everything worked out up front. So that way I know when you write an offer that they can close escrow on time and smoothly. Very important. Our loans are not underwritten through any kind of automated system. We don't run it through like a Fannie Mae desktop underwriter or even a Freddie Mac loan prospector. It's done old school with a magnifying glass and a pencil and figuring everything out and pulling all the credit, doing all these things and reading everything, right? So it takes some time. It could take a week or two, depending on the client and the complexity of their file, to get a pre-underwritten approval. So very important we knock that out in the very beginning. Also, a client has to go through reverse mortgage counseling. This is about a 30 to 45 minute telephone conversation with a HUD licensed nonprofit company that provides the counseling session. Once they go through the counseling session, they get a certificate that's valid for 6 months. Excuse me, the counseling certificate allows us, when they get an accepted offer on the property, to pull an FHA case number and ultimately order an appraisal. So ordering appraisal usually should be done within the first week of an accepted offer, right? We have to meet appraisal contingencies and all these things. So it's important we get that knocked out right away. It's a big piece of the puzzle. So getting the counseling and the pre-underwriting done is something that we like to do right up front, hopefully before we even list their current property. But if you list their property, that's fine. Ultimately, we like to have these things knocked out before you write an offer. No seller or agent concessions. I just looked at an RPA this morning on a customer's deal, and the refrigerator and the washer and dryer were coming over, and there was a value attached to it, and that's a concession. So it doesn't necessarily have to be a cash concession. It could be a personal item. If there's value given to it, it's a concession. So I had to advise the realtor to write an amendment to the contract or an addendum saying that no value was given to those items, and the price is what it is of the home, and that'll satisfy the issue at this point in time. FHA mandatory escape clause, this should be included with your initial RPA or offer. It must be signed by all parties, and this is in your FHA section of your WIN or ZIP forms. And of course, if you have any questions before you get involved in a transaction such as this, or just have general questions at all, this is a realtor hotline. Only realtors call this number. We try to handle this or be on this number 7 days a week, 24 hours a day if we can. I do have to get some sleep here and there, but we try to handle that number because we know that realtors work on the weekend, right? So if I can't get you handled on the weekend, what good are we? That's when you guys are starting to work more and network and do listings and open houses. And so we got to be available just like you guys are working. So very important. Call that number if you have any questions. All right, Crystal, do we have any questions?
Yeah, we do have questions. Let's answer the first one from Joseph. It's two questions, but I'll like put it in one. But basically, the question is how do they buy before they sell their house? And then two, the question was about like how do we get that equity from the house to buy the new one? And I think you can also talk about maybe instances where you may not necessarily need to, sell a house to buy a house with a reverse mortgage for purchase.
Sure. Well, ultimately, the down payment has to come from somewhere, right? So if we're doing a situation, I'll give you a few examples. Let's say we have they're selling their property. They're contingent upon the equity of that house after it closes for the down payment. Well, in that case, you have to write a contingent offer, and we need about a week in between the closings so that way we can get the funds from the house they sold wired over to the new escrow for the down payment. So that's number one. Number two, if they don't want to sell their property and they want to use a reverse purchase to buy another primary residence, so they're vacating the house they're keeping and buying another residence for their primary, they still need a down payment. So if it's not coming from the property, then it has to be coming from cash they either have on hand or they're getting gift funds from a family member, and we can accept 100% gift funds. But I will tell you this, majority of the transactions that I've been a part of, the down payment comes from the house that they're leaving, their primary residence. They're selling that property, and then they're after that house closes and funds out, and that money gets transferred into the escrow, that's where we're usually doing that. So that would be your typical contingency sale, right? Contingent upon the house they're selling. So those are the usual ways. So it's either they have the cash on hand or they're getting gift funds from a family member, or the departing equity of the house they're selling is the down payment.
Okay, thank you for that explanation, Rob. They also had one more question, which was, can you kind of maybe give an example of what a reverse mortgage monthly mortgage statement would look like, since they don't have to make they can make optional monthly mortgage payments? Sounds like maybe some of our realtors are curious what that statement looks like.
Well, the statement, so it'll show the balance, of course. It's going to show the interest costs for that month. It's going to show you the mortgage insurance costs for that month because it's FHA insured. So those costs, you add them together, and that's your total cost for the month. If you wanted to write a check, you can pay that, keep the balance even, or you can just let it defer to the balance, which most people do. They don't want to make a mortgage payment anymore. In addition to that, if you have available funds on your reverse mortgage, it will show you that as well. It will show you the line of credit, for instance. It'll show, hey, you have $150,000 line of credit available to you. And on that statement, there's a number there to contact if you want to pull some of that out. They simply wire the money into your checking account. But the statement, just so you know, it can be confusing. And this is why we get a lot of calls from realtors. A lot of times the realtors will come across a client that has a reverse mortgage. And the clients sometimes don't know how to read the reverse mortgage statement, or even the realtor themselves. And they call us, and then we kind of go through it with them and help them understand how the statement reads. But for the most part, it shows your balance, it shows you the interest and mortgage insurance costs for that month, and any available proceeds that you have. And it's usually about a 2-page statement.
Okay, thank you, Rob. Let's see, the last two questions here I can answer, Victoria. The copy of the recorded webinar here will be sent to you by SCCOR, and probably will either come from Jody or come from Malia. So just keep an eye out on your email later, you know, in the next few days. Joseph, you asked if they can get like a bridge loan. I assume that means like if you can get like a loan with a reverse mortgage, and you inquired about like a sample to show a prospective buyer. So Rob, you can explain more on this, but with the reverse mortgage, that can only be the only loan on that home. Now, in terms of actual samples, if you have a specific situation or you already have a prospective buyer in mind, get in touch with us after the class. That 888-242-5959 number, if you want to just write it down really quick or just put it off to the side, and then you can call that number once the class is over, because if you already have a prospective buyer in mind, we'd love to give you some specific you know, samples that is pertinent to what the current specific situation is. So get in touch with us and we'll help you with whatever you really need to show that prospective client. Rob, you want to add anything?
Yeah, I just want to add to Joseph's comment there. Can they use a bridge loan? For the down payment, it cannot be borrowed funds, but with an asterisk. So I've had clients in the past that have pulled cash out of another property, maybe a rental or something like that, for a down payment. And what they have to do, though, is even if they're borrowing it, they have to stick it in their checking account and season it for 90 days. In other words, I need to show 2 full bank statements without any large deposits for the down payment. So it's all got to be sourced and seasoned. So if they do pull cash or borrow money from somewhere, then it has to be in their possession for 90 days in an account that we can source and season.
Okay, sounds good. But yeah, get in touch with us afterwards if any of you also have a specific question. Get in touch with us, and we're also going to show you a way coming soon in the PowerPoint that you can actually just calculate an estimate of a potential client's down payment on the spot on your own without needing to contact us. So let's go ahead and continue with the rest of the class. We got about 20 minutes left before we can get to the last round of questions. So let's keep going.
Let's do it. All right, I'm going to breeze through these really quickly here. These are some things that are going on with our older homeowners, more specifically the baby boomers. But keep in mind, a lot of this stuff also applies to my generation, which is Gen X, and younger generations as well. So we have 10,000 boomers turning 65 every single day, and that'll continue until 2030. So just this morning when you woke up, 10,000 boomers turned 65. We have 105 million World War II baby boomers out there. We're ranging from the ages, I think, 57 to 75 now. Excuse me. 45% of our boomers have no retirement savings. And by the way, keep in mind, this is just not our boomers. It's a lot of other generations as well. Only 55% of our baby boomers out there have some retirement savings, and 28% of those folks have less than $100,000 saved in retirement. So what you have here at the end of the day is the bulk of our retired generation is living off of Social Security alone. That average Social Security benefit is about $1,543 a month. So you can understand how, if you own a property, that it's hard to make a mortgage payment on time. It's hard to keep the house maintained, keep groceries in the refrigerator, have some entertainment money. A lot of times our older homeowners are living in a house that's just causing them all kinds of havoc and shortfall in retirement. So, when you retire, you retain most of your expenses and you have a drastic reduction in income. So that's how these things play out usually. And a lot of times our borrowers don't have pensions. Those are a thing of the past, and they were basically forced to self-fund their retirement through a 401k. 401ks fluctuate up and down. It's hard to save in retirement, you know, especially living in California, very expensive state to live in. But at the end of the day, you know, if they're not working to recoup some of those or that money, then it's very difficult. And selling that property and getting to a better home for retirement, maybe using a reverse mortgage might be an option for them to sustain and live a better retirement situation. So that's what's going on in our older homeowners. So I'm sure you guys are quite aware of this, but there's a lot of good information out there that helps us understand the pitfalls and how we can help our older homeowners live a better retirement. Now, obviously, we know that a lot of homes out there have equity in them, especially amongst our older homeowners. So if you look at just the 65 and over population that are homeowners, we have north of 7 trillion in homeowner equity out there that's just sitting there. And they're looking at that equity, trying to figure out how do they tap into that equity and how do they tap into it, more importantly, safely, right? Because it is your home equity. You do need to protect it, and especially if you need it for your retirement needs. So finding out ways to tap into that equity is safely is very important. A reverse mortgage can do that. Selling the house can do that. All sorts of things. So what I really want you to understand is that you are all realtors. You have real estate licenses. It's becoming more upon you than a financial planner to help out our older homeowners live a better retirement, and folks like myself who provide reverse mortgages. So that's a good thing. And a lot of times when I'm working with older homeowners, I'm letting them know, look, you know, maybe you didn't save enough in retirement. You know, it's okay. You bought a house a long time ago. You made payments. Your house is worth more today. That was a great investment. You did very well for yourself. Just know that you have to utilize it safely and tap into it, right? So that's, they're usually comforted knowing that. That's a good thing. All right, let's talk about what happens in the future with a reverse mortgage. So this really ties into that last bullet, number 3, that I talked about. Understanding how to help an older homeowner or their heirs when they pass away, right? What happens when they pass away with a reverse mortgage? Well, there's 2 likely outcomes. Either the house has equity or it has no equity. And that could be for many reasons, right? Maybe we're in a down real estate market and they never made a payment, their reverse mortgage balance is high for underwater. Or maybe they did maybe their house appreciated very well over the last, several years, and they did a good job with the reverse mortgage, and now they have equity, right? So 2 likely outcomes, above water and underwater. Let's dive into the above water. So this would be you explaining this to the heirs. Mom and dad have passed away. They have a reverse mortgage. The home value at that point in time is $600,000. The current reverse mortgage balance is $400,000. And now here's you telling the heirs their options. Number 1, well, if they want to keep the house, they can do that. Simply pay off the reverse mortgage. They can do that with cash, another loan, or a combination of the 2. Pay off the reverse mortgage, and they're more than welcome to keep the house and the equity, and they can do whatever they want. They just have to pay off the loan because the borrowers are now deceased, right? If the borrower or the heirs do not want to keep the property, very simple. They simply list the home as a standard equity sell the piece of real estate, pay off the reverse, whatever's left in equity, the heirs get. So this would be you explaining it. So when you come across older homeowners that have a reverse mortgage, educate them on these aspects, talk to them, stay in front of them, put them in your database, get monthly newsletters out to them, because one day they will meet their maker. And that piece of real estate will probably end up being sold, and that's a future listing for you to handle with the heirs, right? So they could sell the house, very simple. Even if the borrowers are living, right, they didn't pass away, and they want to sell the property, that's fine. A reverse mortgage is not a permanent loan. It's just like any loan out there. You can pay it off whenever you want to. There's no prepayment penalties. You can get a reverse mortgage today, and 2 years from now, turn around and sell the property, pay it off, and go buy another house with a reverse mortgage. It's not a permanent loan. It should be used when you have it in place for a long time, but it doesn't mean you're stuck with that loan the rest of your life. You can refinance out of it. Heck, you can even refinance a reverse mortgage to a new reverse mortgage, assuming that it makes sense. Better rates, more equity to tap into, etc., right? So moving on to underwater, let's say the heirs are now contacting you. They're like, mom and dad have passed away. What are our options? They have a reverse mortgage. You're explaining now, you're saying, look, your home value is $300,000. your reverse mortgage balance is $400,000. The house is upside down by $100,000, right? Well, if they want to keep the house, they can do that. And here's how this plays out. If they want to keep the house, they don't have to pay off the entire balance. All they have to do is pay off 95% of whatever that market value is at that time. So in this case, 300,000 multiplied by 95%, that's 285 payoff. Now the other 115,000 that's owed on the reverse mortgage is simply covered by FHA. FHA makes an insurance claim out of the mortgage fund right to the original investor. They're paid off in full plus all the interest. Heirs get the house 5% below market value. Voila, everybody's happy at that point in time. That's called the 95% rule. If the heirs decided, you know what, that 95% rule is great and all, we just don't want to take advantage of it, we're going to go ahead and not do that. What are our next options? Well, the next option is to simply do nothing. You can walk away from the property, let it go to foreclosure. And the reason why it's going to foreclosure is because it's no longer owner occupied. The borrowers are now deceased. At that point in time, a notice of a default would go out to the property. They don't respond to it. A notice of trustee sale goes out. They don't respond to that. Then it goes to the courthouse for auction. If it doesn't get purchased at an auction, then it goes back to the original investor as an REO, and there's nothing that's going to happen to the estate of the deceased borrowers or the living heirs at all. This is a non-recourse mortgage. Nothing happens. The house just goes to foreclosure, and the heirs walk about like nothing ever happened, right? Very, very simple. The last thing that can happen is if the heirs decided, hey, let's hire a realtor and short sell it. Well, you're probably thinking, well, why would the heirs want to short sell the property if they can simply walk away and not get penalized for that? Well, I'll tell you why. They're starting to offer cash for keys or incentives for the heirs to participate in a short sale. And here's why. If the house gets sold on the open market, as opposed to being sold at an auction or going back to the original lender, the house is going to command a higher price usually in the open market, which would lessen the insurance claim by FHA. So they're starting to work with more heirs on the short sale process. So that's a great way. If you come across that situation, you can list the house for short sale, pick up a couple extra bucks for yourself. But that's a very cool strategy. So these are the exit strategies of a reverse mortgage. Keep this slide close to your vest because, like I said, you will come across older homeowners that have reverse mortgages. If you explain these items to them, if they don't understand, then you can start to build that relationship with that older homeowner and even their heirs or their family. So that way you can come in and help out when they finally pass away and help out with that house, whether they list it, short sell it, you're there to help out, right? That's the idea. You're creating a future book of listings for yourself with people who have reverse mortgages currently. So very cool slide. Get a lot of questions on this stuff every single week. All right, a lot of myths about reverse mortgages. Fortunately, today, I'm excited to say that a lot of our borrowers or consumers that are looking into this product don't believe these things anymore. They don't believe some of the old myths, right? They're on the internet. Our boomers are technical savvy as anybody is these days. They're on the internet, they're reading, they're understanding all this stuff. So back in the day when I got into the industry, it was a little more difficult, but now it's a lot easier overcoming these myths. The government bank does not own the property. It's just a loan like any other loan out there, records against the property. If the house appreciates in home value, of course, that appreciation belongs to the borrowers, the homeowners, or the heirs, right? Can my heirs inherit the property after I pass away? Of course they can. It's your property. You can give it to anybody you want. Now, if the house is vested in your name as a single person or a married couple, and all homeowners are deceased, well, that could be a probate situation. That has nothing to do with the reverse mortgage. So therefore, my advice to most of my older homeowners is try to hold your house in a trust. I do. I'm young. At least I'm youngish, so to speak. I'm 47 now, but I have a trust set up because I've been in the business long enough to know the horror stories, what happens out there with not having a trust set up. If my balance exceeds the value of my property, can I still live my property? Of course you can. It doesn't matter what your balance could be $1 million and your house could be worth $100,000. As long as you're abiding by the rules of the loan, you can stay in the house for the rest of your life. Not a problem. Now let's talk about those rules. When you have a reverse mortgage, you have to occupy the home as your primary residence, which we talked about. Sometimes older homeowners may get diagnosed with dementia or Alzheimer's and require care outside the property in some sort of skilled or memory care facility, right? Well, if you're outside the house getting care for more than 12 months, the loan needs to be paid off either by refinancing out of it or selling the property. If for some reason the loved ones or the family members bring that person back home within 12 months of leaving it, the clock restarts. So this is another good thing to explain to homeowners that may have this situation. So if they're planning on getting care, get them back out of the facility into that home within 12 months of leaving it, clock restarts, loan remains in good standing. So occupancy is a big deal. Number 2 here, after you get a reverse mortgage, despite not having property taxes, despite not having a monthly mortgage payment, you still have to pay your property taxes, homeowners insurance, and a homeowners association dues on time. So if you start to default in any of these items, the servicer of the mortgage has the right to begin foreclosure. So very important. This was a huge issue in our industry years ago because we never looked at income to qualify that they can afford these items after getting the reverse. Fast forward to today, now we make sure they have enough income to handle at least the bare bones housing expenses on the property. So that straightened out a lot of our issues in this industry. Number 2, you got to maintain the home to minimum FHA standards. Well, what does that mean exactly? Well, minimum FHA standards, if you want to read that list, it's on FHA's website. But basically, when you get a reverse mortgage, whether it's a refinance or a purchase, there's an appraisal that's done. The appraisal is there, obviously, number 1, to determine the value of the property. Number 2, to make sure it meets the minimum standards that FHA has put forth. So as long as it comes back as it meets all those standards, I tell my customers to simply keep the house in that condition and you should be fine the rest of your life. The number 1 usual default on a reverse mortgage is because all the borrowers have passed away and nobody's responding to the notices at the house. So that's usually your foreclosure issue, is that all borrowers have passed away and nobody's communicating with the servicer their intentions with the property. All right, let's talk about, we're probably going to go over maybe 5 minutes today, but after this slide here, we're going to dive into some marketing ideas to attract older homeowners to list their properties. So when you calculate down payments and loan amounts with the reverse mortgages, it's all determined on obviously the purchase price of the home and the age of the youngest borrower. Let's dive into that. We made an app for you guys to download on your phone. If you want to download it to your phone, it's very basic to use. You go into your app store, search REV, R-E-V, the number 4, P-U-R, REV for per in your app store, and you'll find the app. You can download it. It's a free app. It helps you calculate down payments and loan amounts on reverse purchases. So here's how this works. Put the buyer's ages in there and the purchase price and hit calculate. It'll tell you the down payment required and the loan amount to finish off the purchase price. If the down payment that you're seeing on the screen of your phone happens to be remotely close to the proceeds they either have on hand for a down payment or the net proceeds from the house they're selling, you got yourself a possibility here of a good transaction, a listing and a buying opportunity. That's bonus number 1. Number 2, okay, so when you're married, right, this is when the loan gets a little technical. For married couples, only one spouse needs to be 62 or older. The other spouse could be younger. That spouse could be 55 years of age, for instance. So if we have a 62-year-old and a 55-year-old, you can qualify for the reverse mortgage. However, we're going to base the loan amount on the 55-year-old because their life expectancy is longer. That's a longer duration of time of not making a monthly mortgage payment, which would mean a higher balance in the future. So knowing the ages or the dates of birth of the borrowers is very important. That tells us what the loan amount will be. It's not like we set the loan amount in the system. We simply input the dates of birth and FHA spits back the loan amount. Unmarried borrowers, everybody has to be over 62 to qualify for the loan and be protected. So that's an important thing. So if you have brothers and sisters, best friends, you name it, mom and dad, or mom and son, or whatever, any combination your wildest dreams can think of, everybody's got to be over 62 to be on the loan and be protected to live in the house the rest of their life. But we will look at the youngest person in that group of people. 822,375. This is our max purchase price and or value we look at to determine the loan amount. So if you have two 70-year-old borrowers that are not related buying two separate properties in two different counties, well, if one's buying the house at 822,375 and the other person's buying the house at $1 million, they're both going to get the same loan amount at the age of 70. However, the person buying the more expensive house over 822,375 will have a bigger down payment, exactly dollar for dollar over that amount. So FHA's value, max value, is 822,375. Once you get to about 900, 950 or so in purchase price or value, we want to start looking at the private sector. These are non-FHA reverse mortgages. They have some different ways they work. In other words, they have higher interest rates and they have lower loan to values, but they start to really come into focus over that $900,000 mark. We're starting to see more and more of these loans get done. These products have been around for about 9 or 10 years now. I'm doing more and more of them every day as we get into these higher value properties. And a lot of these older professionals like lawyers and doctors and things like that, high profile jobs that have $4 million properties that are having a $2 million loan, that are saying, I'm not making the income I once was to pay that $2 million mortgage payment. Can I get a reverse to pay that thing off? And a lot of times they can now. So that helps out a lot. All right, that's the app. Download that, go to your app store. Let's dive into some marketing materials or some marketing ideas. The first thing we have here, I'm going to briefly go over these, and then Crystal's going to tell you how to gain access to all these things, complimentary marketing materials, newsletters, etc., that are going to help you attract older homeowners. So the couple things we have here. The first one, we have GoCourt'em. This is a website that we created in our house here. It's called GoCourt'em.com. And what this site is designed for, it's for when you come across that older homeowner and you're like, gosh, I know that person's probably going to list in the next year or 6 months, maybe even a year and a half. I just don't have the time or the resources to develop a campaign to stay in front of them. So when they do decide to list, that they list with you, right? Well, we built that site for you. Look, realtors are busy. You guys wear many, many hats, right? Your psychologists, your financial planners, your real estate professionals, your best friends, you name it, right? You wear a lot of different hats when you're in these transactions. So GoCourt'em is the site that you can simply take that older homeowner and say, look, I'm going to put them in the system with my name in there as well as you, the realtor, and we're going to mail them for you newsletters that are very applicable, it's good information that they need to know before they sell their property, such as like knowing what Prop 19, how does that affect their property tax base, right? Understanding capital gains. Do they have some sort of tax liability after they sell their property? It talks about, other newsletters talk about, beware of all cash buyers, right? Because cash buyers are going to offer less than market value, usually 60 to 80 cents on the dollar, less than what they can get in the open market. Look, it's no secret. When you list your house with a realtor, although you're paying compensation to a realtor to sell your property, they bring a higher value, right? So you're going to ultimately net more proceeds. So that's what we want to illustrate to those older homeowners. So we have many different newsletters that go out to them on your behalf. And the idea is that they call you to ask more questions about it and things like that. So, and the cool thing that's great is once that newsletter goes out, or that email even goes out on your behalf, you get alerted that it goes out, and that gives you an opportunity to call that older homeowner and say, look, did you get my newsletter on Prop 19? Did you have any questions about that? Do you want to meet for coffee and talk about, if you have a possible capital gain issue or things like that, right? So very important. That's GoCourt'em. Title Pro 24/7 is another website that you might already have access to. Your title professionals out there have access to this. We give it to you for taking our class today. It's for free to have, but when you do buy the data, you have to pull it down. It costs like 6 cents a record, but it's very inexpensive. And that goes straight to, I think, Fidelity, who bought that company originally. But Title Pro is a data aggregate site. You can pull in age parameter, income parameter, loan to value parameter, property type, property style, you name it, pretty much anything you can think of. And this allows you to really understand who lives behind every single door in your farm, in your neighborhood, around your office. So that way you can deliver the perfect mail piece or door hanger to them that really speaks to them, right? So building like a campaign for older homeowners, you would select an age, range, loan to value factor, income. You want someone with a lower income showing that they might be struggling in retirement. Get them some good newsletters about downsizing and right sizing and having a mortgage that they can buy a house with no monthly mortgage payments or optional monthly mortgage payments. Just really start to talk to them directly. And maybe the next house, you do another door hanger that says, hey, are you a younger homeowner with a bigger family that needs a bigger property, right? So you can be really specific to each door on what you send there. Remine, I'm not sure if you have access to this in your MLS. It might be a paid subscription now, I think I heard the other day. But Remine is a prediction software that will predict who in your farm or around your area has a highly likelihood of listing their house soon based on historical data. So these sites are all available to you. With GoreQuotum, that's our specific proprietary site. So that, we don't want you to throw your entire database in there because we're paying for the mail. It can be very expensive. So maybe just throw like 3 to 5, maybe 10 or so clients that you think have a high likelihood that are older that want to list soon, and we'll market to them for you on your behalf to try to generate some activity between you and that older homeowner. All right, Crystal, let's dive into how they get access to this stuff and what happens after today's class. And then obviously we'll take any questions we have over, and then we'll wrap it up.
Okay, sounds good. Thank you everyone, by the way, for sticking on just for a couple more minutes so we can relay this information to you guys. So as a thank you for attending our class, we want to get you access to our Realtor Resource website and Title Pro 24/7. And you're going to get the logins in your emails later today. When you click on the email that you get, it'll just prompt you to sign up and set a password, and then you're all good to go. So once you get to log into our website, you're going to be able to access a couple things here. So the first thing that you'll be able to see is that you get access to our in-depth course refresher. So we know that this isn't a 1-hour class that you just took and there are just so many things we just threw at you, but this course refresher is designed to help you learn and relearn at your own time and at your own pace. We cover the topics that we covered about in today's class. However, we also talk about things that we didn't actually get to cover. So for example, with the reverse mortgage for purchase, there's something called overfunding. And if you think that's very interesting, then go ahead and take a look at our course refresher and watch our videos. They're just about 10 to 15 minutes each, so you can just watch them at any time in any order that you like. It's there for you as a reference. And then besides our course refresher, you'll also be able to get access to our marketing materials. Rob, if you want to go to the next slide, we have downloadable complimentary marketing materials. These are professionally made. You can either send them to a professional printer or you can just download them at home, whatever is, best fits your marketing strategy. These materials are really cool in that you get to put your information on the back for each and every one of them. So you can put your name, your contact information, your licensing, so on and so forth. We also, for some of them, have options to put like a picture of your headshot or your business card. So those are very, very cool. See which ones best fit for you. And then like Rob said, if you put one of your prospective clients in GoreQuotum, we'll mail them for you on our behalf. So that's super, super exciting. Last but not least, you get access to our video library. We have a lot of just videos we've done over the years, as well as you get access to our tutorial on Remine and our tutorial on Title Pro 24/7. So with the login on Title Pro 24/7, it works the same way. All you have to do is just click that email that you get later today or early tomorrow, and it'll prompt you to put in a password and you're all good to go. With that being said, Rob, if you want to go to the last slide, if you have any technical issues, if you don't get your logins in a couple of days, give us a call at 888-242 5959. That's the phone number that we had earlier. And yeah, this is our realtor line. So let us know if you have any issues at all whatsoever using the website or with Title Pro 24/7 getting those logins. If you want to get in touch with Robert directly, Robert at Reverse Mortgage Educators is his email. If you want to get in touch with Ryan, his partner, there's Ryan's email as well, Ryan at Reverse Mortgage Educators. And right there, the reverseeducators.com, that's going to be that realtor resource website where you'll be able to access our complimentary marketing materials, course refresher, and our video tutorials, and also go court them as well. You can also head over there to get access to all those things. With that being said, thank you everyone for sticking with us until now. Let's get to the questions, Rob, and then you can do a closing statement. So the first one I see here is, I did kind of answer these, but you can definitely, actually, no, this one did not answer. From OJ, do you get an IRS 1098 or can you use interest on a Schedule A and assume to mean to qualify for an R4P?
Okay, so 1090, you're saying we're getting a 1098 from the reverse mortgage? If that's what you're saying, then the only time you ever get a 1098 from a reverse mortgage is if you make payments to the reverse mortgage throughout any calendar year. They will send you a 1098 for the interest that you paid. But if you don't pay anything and you let the interest defer, then there's no 1098 that's generated. Can you use interest on a Schedule A? Well, yeah, if you make payments and you get a 1098, that is well, under the new tax laws, I think an open-ended mortgage, like a line of credit or something like that, cannot be included in your income tax, or as a deduction rather. So I think that may be dependent on the type of reverse mortgage you have, whether it's an adjustable or fixed. So, but that would be something that I would definitely defer to a licensed CPA. There's my disclaimer.
Sounds good. Next question that we had was basically if they're 70 years old and they have $500,000, like what kind of home can they buy?
So let's see here. So 70-year-old, let's see, buy a home with reverse mortgage. Is this your first home? Retiree, I'm scrolling right now. 500K. Okay. Yeah, I mean they got some options. That's something that we definitely want to. I'll tell you what, that's a scenario that I would like to bring offline. But yes, you have something here. You're saying they have 500K that they can play with. They're 70. Yeah, they can buy a house. So just depending on what purchase price we're looking at, they got options with this one for sure.
Yeah, so that would be like kind of what I was saying too. It's a bit more of a specific situation. Get in touch with us,
Yes.
and we'll play around with some numbers for you and get them over to you. Let's see here from Christy. She asked, can you still transfer your tax base if you use the R4P?
Absolutely. So the transferring of the property tax base has no relevance to a reverse mortgage. So that has nothing to do with us.
Awesome. Aki asks, what happens if they cannot pay their taxes and insurance? What are their options with a reverse mortgage?
Well, if they can't pay their taxes and insurance, you're saying like they don't qualify? Is that what we're saying? If that's the case, then what we can do is we can always look to an asset they may have. We can do asset dissipation, which is basically taking their asset and dividing it by their life expectancy to generate an income source, if you will, and that'll help overcome some of those issues. But as far as property tax and insurance, if they straight up do not qualify for that item, or those items rather, then they might have to buy a lesser expensive property or something along those lines to make the numbers work. Like we can't just say, look, we're gonna like impound your taxes, insurance, and pay them for you, and that'll solve the issue. They have to demonstrate on their own that they can qualify for those items.
Gotcha. Okay. Doesn't look like there's any other questions. If anyone has any last minute questions, now's the time to put it in the chat. But otherwise, oh, Joseph asked, I heard that you can impound with reverse mortgage. You want to talk about that real quick?
You can. So the way they do it, so if you think about a regular impound account, every month you make a payment and a portion of that goes into an impound account, and that builds up over a certain amount of time. Then they simply take that money and pay your taxes and insurance. Meanwhile, the account has been building up again by making more payments, right? That's your traditional impound account where you're making payments on a mortgage. With reverse mortgages, you don't make payments. So how would that get funded, right? Well, here's what they do. They simply take, okay, for instance, if you're buying a house with a reverse mortgage and you're saying like maybe you're 70 years old and your life expectancy is another 14 or 15 years, what they're going to do is they're going to hold back 15 years of taxes and insurance payments from the available loan amount, which means ultimately you're putting that down more to fund that, what we call a LESA, L-E-S-A account. And then they simply make the payments out of that set aside money for the rest of your life. There's a couple benefits to that because one, you're not borrowing as much money from the reverse mortgage to buy the house, you're putting more down, and that money's set aside. And so you haven't borrowed it yet. So you're going to save on deferred interest over your lifetime. I don't want to get too much into that, but it can be a better situation. But typically, just overall, we're trying to avoid the LESA account because more times than not, the homeowner requires the biggest loan amount they can get their hands on because they usually have a down payment that directly associates with that. And they're trying to get to a certain purchase price in the home. So typically we try to avoid LESAs, and we only implement those typically when they have credit issues that we can't explain, but you can do that.
Okay. All right. If there's no more questions, Rob, you want to do a quick wrap up and then let's get everyone out of here.
Yeah. So the biggest thing of today that I like to point out is this: if somebody that you know or somebody in your book of business asks you about a reverse mortgage and they say, look, what is this reverse mortgage thing? How does it work? Can you explain it to me? Obviously, do your best to explain it, but more importantly, understand that they have a financial issue if they're asking that question. And more times than not, that turns into a listing rather than a reverse mortgage on the house they're living in. And maybe that reverse mortgage for purchase product would be something that they can use to buy a better property. That's my takeaway. So just know that these loans are out there, these clients are out there, they need our help. And this is a great solution for them to get to that better property.
Okay. All right. Well, thank you so much for everyone to hang on till the very end of the class. Thank you, Rob, for teaching the class today. And thank you so much to Jody and Malia over at SCCAOR for letting us do this class for you guys. We really appreciate it. So look out for the correspondence from us later today. We'll be in touch with everyone to get you guys all these logins, and have a great rest of the day.